Hello viewers, welcome to my channel. I'm Hasham. Presently I am doing the problems on marginal costing. Already 23 problems I have solved on marginal costing, explaining in detail how to compute BEP, how to compute margin of safety, etc, etc. So if you have joined right now, I suggest you to go to the playlist, select the subject Managerial Accounting. In this subject you will find the chapter topic Marginal Costing. So watch the first video. I have explained the technique of marginal costing, what is break-even analysis, CVP analysis, absorption costing, and what are the formulas in marginal costing. All these things I have explained in the first video introduction. Without understanding the concept, it will be difficult to follow the problems. So my suggestion to you, if you want the complete command, good knowledge on the subject, so follow my instructions. First watch the complete introduction theory part of this marginal costing. Then starting 1 or 2 videos are very important to get a grip on this topic. Now already 23 problems we have solved. In this video I am explaining the next problem, 24th, 25th, like that. But if you are new to my channel, I suggest you to visit the playlist. I have uploaded a number of subjects videos like financial accounting, cost accounting, corporate accounting, advanced accounting, business statistics, financial management, investment management. So many videos I have uploaded. Select your subject, select the topic, watch the video and increase your knowledge. Get a good command. Now I will start the next problem, 24th. So before starting the problem, I expect my viewers to have a hard copy printout of the problems. I have given these problems in the link under my description. So go to the link, take a copy printout and keep it ready before watching the problems. Now 24th problem I am reading out. In a recent period, Zach company had the following experience. Sales 20 lakh rupees are the sales, 10,000 units at rupees 200 per unit. The total sales are 20 lakh. In that 20 lakh, 10,000 units are produced and sold at rupees 200 each. So 200 into 10,000, you will get 20 lakh. Then cost. The costs are given fixed cost and variable cost separately. So cost में direct material 2 lakh rupees variable, direct labor 4 lakh rupees variable, factory overhead 1 lakh 60,000 fixed and 6 lakh rupees variable. Administration expenses 1 lakh 80,000 fixed and 80,000 variable. Other expenses are 2 lakh rupees fixed and 1 lakh 20,000 variable. The total fixed cost comes to 5 lakh 40,000. 1 lakh 60,000 plus 1 lakh 80,000 plus 2 lakh. So 5 lakh 40,000 is the total fixed cost. We require the total. We don't require individual fixed cost. We want the total fixed cost. Total fixed cost 5 lakh 40,000. You see the total variable cost. There is a printing mistake in the problem. It is given 1 lakh 40,000. It is not 1 lakh 40,000. It is 14 lakh. If you add up all the values, 2 lakh plus 4 lakh plus 6 lakh plus 80,000 plus 1 lakh 20,000, you will get 14 lakh. And 14 lakh plus 5 lakh 40,000, the total is 19 lakh 40,000. The total of variable cost and fixed cost combined together, 19 lakh 40,000. How 19 lakh 40,000? 5 lakh 40,000 fixed and 14 lakh rupees variable. So net earnings, profit is 60,000. Now required. Calculate break-even point of Zach in units and in rupees. The first question, you have to calculate BEP in units and in rupees. And show your calculation and use the contribution margin ratio to find out the break-even, rupee break-even. Specifically given, to find out the BEP in rupees, use contribution sales ratio. Contribution sales ratio is PV ratio. By using PV ratio, calculate BEP, it is asking. So we will follow it. And what sales rupees would be required to generate a net income of 96,000? That means sales required to earn a desired profit of rupees 96,000. Then third question, what will be the break-even point in units if the fixed costs are increased by 18,000? If the fixed costs are increased by 18,000, what is the new break-even point? New BEP. The 3 questions are asked. One by one we'll attempt. It's very simple. Total sales are 20 lakh. and selling price per unit 200 rupees given in the problem. First line it is given 10,000 units are sold at rupees 200 each. So 200 rupees selling price. Total variable cost is 14 lakh. There's a printing mistake in the problem. It is given 1,40,000. 10 was ignored, omitted by mistake. So it is 14 lakh total variable cost. So 14 lakh. So variable cost per unit 14 lakh divided by 10,000. Because how many units we have manufactured? 10,000. So 14 lakh divided by 10,000 is 140. The selling price per unit 200 rupees given in the problem. But variable cost per unit is not given. Total variable cost is given. So we have calculated variable cost per unit 140. Total fixed cost given in the problem 5,40,000. Profit 60,000. This is the information given in the problem. Now we'll attempt the questions. The first question, BEP in units. We already know the formula for BEP in units. Fixed cost divided by selling price per unit minus variable cost per unit. The fixed cost 5,40,000 given in the problem. Selling price 200 rupees, variable cost 140 rupees. So 5,40,000 divided by 60, 9,000 units is the BEP. First question completed. The break-even point BEP is 9,000 units. Now it is asking you to calculate BEP in rupees. But this BEP in rupees should be calculated by using contribution sales ratio. It is specifically asking in the problem. So we calculate PV ratio first. So PV ratio is equal to C by S into 100, S minus V by S into 100. We can take the selling price. The selling price is 200 rupees. We can take the total sales also, we'll get the same answer. If you take the total sales 20 lakh and total variable cost 14 lakh. So 20 lakh minus 14 lakh divided by 20 lakh, you will get same 30%. Whether you take total sales or selling price per unit, you will get the same PV ratio. So here 200 rupees is the selling price per unit, 140 rupees is the variable cost per unit. So 200 minus 140 divided by 200 into 100, you will get 30%. So PV ratio we got 30%. Now we can find out the BEP in rupees. The BEP in rupees is equal to fixed cost by PV ratio. Everything depends on the formula. That's why again and again I am telling to watch the first introduction theory video. Then only you can get all the formulas. I have given the formulas there. Remember the formula. Fixed cost by PV ratio. 5,40,000 divided by 0.3. 30% can be written as 0.3 in fraction. So you'll get 18 lakh rupees is the BEP in rupees. First question completed. Second question is asking you sales required to earn a desired profit of rupees 96,000. Second bit, B bit, sales required to earn a desired profit of rupees 96,000. Formula number 6. I have given 7 formulas in the first video, introduction. The 6th formula is sales required to earn a desired profit. The formula is fixed cost plus desired profit divided by PV ratio. The fixed cost plus desired profit by PV ratio. The fixed cost 5,40,000, here it is there. Then 96,000 is the desired profit and PV ratio is 0.3, 30%. So 6,36,000 divided by 0.3, 21,20,000 finished. 21,20,000 is the sales required to earn a desired profit of 96,000. When we sell this much of goods, we will get 96,000 rupees profit. Second part completed. Third part, what is the new break-even point in units if the fixed cost is increased by 18,000? It is given in the third question. Third point given, what is the new BEP in units if the fixed cost is increased by 18,000? What is the old fixed cost? 5,40,000. Old fixed cost is 5,40,000. In this 5,40,000 we increase by 18,000. So new fixed cost 5,40,000 plus 18,000, 5,58,000. Now new BEP in units is equal to new fixed cost divided by SP minus VC. New fixed cost 5,58,000, selling price 200, variable cost 140. So 9,300 is the new BEP in units. That's it. I have explained each and every point. This 23rd problem, 24th problem. Now I am reading out problem number 25. See carefully. An analysis of Sultan Manufacturing Company led to the following information. So what information is given? Variable cost column and fixed cost column. In variable cost column, percentage of sales. So every element is given as a percentage of sales. Example, direct material. It is given direct material 32.8. What is this 32.8? 32.8% of sales are the direct material. 32.8% of sales are the direct material. उसी तरह direct labor 28.4% of sales. Then factory overhead 12.6% of sales and fixed amount 1,89,900. See here, there are no fixed element in direct material and direct labor. Direct material and direct labor are completely variable. Whereas factory overhead we have some element fixed and some element variable. So in factory overhead 1,89,900 is the fixed amount and variable amount is 12.6% of sales. Distribution overhead 4.1% of sales variable and 58,400 fixed. General administration overhead 1.1% of sales is the variable and 66,700 is the fixed amount. So we have fixed amount in factory overhead, distribution overhead and general administration overhead. So we don't require separately. We want the total fixed overhead. We add up the three amounts, we'll get the total fixed cost. Similarly, percentages we are given separately. Direct material is 32.8%, direct labor is 28.4%, factory overhead 12.6%, distribution 4.1%, administration 1.1%. We don't require individually. We want the total percentage. What is the total percentage? Budgeted sales are 18,50,000. Budgeted sales, expected sales are 18,50,000. You are required to determine. Now different questions are there. First question, break-even sales value. The first question it is asking you break-even sales value. Value means rupees. We cannot calculate BEP in units here because per unit information is not at all given. Per unit number of units are not given. So we cannot calculate BEP in units. We can calculate only BEP in rupees. Second question, profit at the budgeted sales value. Profit. Budgeted sales value is 18,50,000. So at 18,50,000, how much would be the profit? Second question. Third question, profit is equal to how much if sales drop by 10% and if sales increase by 5% from the budgeted sales. What would be the profit if the budgeted sales decreased by 10% or increased by 5%? In this situation, how much would be the profit? This is the problem. Now, see carefully. Budgeted sales are 18,50,000 given directly in the problem. Budgeted sales. Now, total fixed cost. Individually fixed cost is given for factory overhead, distribution overhead, administration overhead. Individually given. We don't require. We want the total. So add up the three amounts. 1,89,900, 58,400, 66,300. 3,15,000 is the total fixed cost. Right? उसी तरह variable cost as a percentage of sales. We are given in the problem variable cost as a percentage of sales for every element, for material, for labor, for factory overhead, or individual percentages are given, but we take the total percentage. So individually 32.8, 28.4, 12.6, 4.1, 1.1. So total, if you take the total, 79%. In simple words, you can say variable cost is 79% of sales. The total variable cost. अब वो variable cost में material भी आ गया, labor भी आ गया, factory overhead, administration सब overheads आ गए. तो 79% of sales. Sales कितना है? 18,50,000. तो variable cost is 79% of sales और variable cost 79% of 18,50,000. 18,50,000 का 79% variable cost है. तो variable cost 14,61,500. Total budgeted sales are 18,50,000 and variable cost is 14,61,500. And how much is the fixed cost? 3,15,000. With the help of this, we can attempt each question. First question, BEP in rupees. For calculating BEP, first we calculate PV ratio. PV ratio is equal to C by S into 100. S minus V. In place of C, in place of contribution, I can write S minus V. दो formulas है. C is equal to S minus V और C is equal to F plus P. तो इंफॉर्मेशन जो प्रॉब्लम में दिया वो फॉर्मूला अप्लाई करेंगे. हियर वी हैव द इंफॉर्मेशन ऑफ S and V. सेल्स भी है, वेरिएबल कॉस्ट भी है, तो C के प्लेस पर S minus V by S into 100. Sales, how much are the sales? 18,50,000. And how much is the variable cost? 14,61,500. Divide by 18,50,000 into 100. So you'll get 21%. So PV ratio, profit volume ratio, we got 21%. Now we can calculate BEP. The formula for BEP in rupees is equal to fixed cost divided by PV ratio. Fixed cost 3,15,000. So 3,15,000 divided by 0.21, 21%. So if you convert it into fraction, 21 by 100, you'll get 0.21. So 15 lakh. One question completed. Break-even sales value. The break-even sales value of 15 lakh. At 15 lakh rupees of sales, no profit, no loss. Now second question. What is the profit at the present budgeted sales volume? Present budgeted sales are 18,50,000. अब ये sales value के ऊपर कितना profit आएगा? तो sales 18,50,000. From sales we subtract variable cost. The variable cost is 79% of sales. Already we have calculated. Variable cost is 79% of sales. जो भी सेल रहेगा उसका 79% वेरिएबल कॉस्ट. तो 79% of 18,50,000, 14,61,500. तो sales minus variable cost, you will get the contribution. So we got contribution 3,88,500. From contribution we subtract the fixed cost. The fixed cost will remain same. So 3,15,000. Subtract 3,15,000, 73,500 is the profit. So remember, sales minus variable cost, you will get contribution. From contribution, subtract the fixed cost, you will get the profit. 73,500. That's all. Second bit completed. Third bit, profit is equal to how much if sales drop by 10%. If actual sales drop by 10%, how much would be the profit? Now, actual sales. Presently, what is the budgeted sales? 18,50,000. From 18,50,000, we subtract 10% because it is given that if sales decreased by 10%, so 18,50,000 minus 10%, 16,65,000 is the sales. Now variable cost. Variable cost is 79% of sales. So 79% of 16,65,000, 13,15,350. This is the variable cost. Sales minus variable cost, you will get the contribution. The contribution we got 3,49,650. From contribution, subtract the fixed cost. Remember, fixed cost will remain constant irrespective of the level of activity. चाहे sales increase हो या sales decrease हो, fixed cost के ऊपर कोई effect नहीं होता. It will remain same. So 3,15,000, here also 3,15,000, here also 3,15,000. The profit is 34,650. So in other words, if sales drop by 10%, the profit will come down to 34,650. Now, last bit. Profit is equal to how much if sales increase by 5%. If sales increase by 5%. So actual sales 18,50,000 plus 5%. The present budgeted sales 18,50,000. 5% increase कर देंगे. After increasing 5%, we are getting 19,42,500. These are the new actual sales. From this we subtract variable cost. 79% of 19,42,500, 15,34,575. This is the variable cost. Sales minus variable cost, we get contribution. 4,07,925 is the contribution. From contribution, subtract the fixed cost. Just now I told fixed cost will remain constant whether sales increase or sales decrease. The nature of fixed cost, it will remain same. So 3,15,000. Subtract. The profit will become 92,925. So if sales increase by 5%, then the profit will become 92,925. That's all. This is the end of problem number 25. Come on, see the next problem. 26th problem. I am reading out the 26th problem. From the following data, ascertain the break-even point. BEP we have to find out first. Selling price 10 rupees. trade discount 5%. This is the new point. Remember, trade discount will be deducted from the catalog price, selling price. So selling price 10 rupees is there and trade discount 5%. So 5% of 10 rupees is 50 paisa. So we deduct the trade discount and we find out what is the selling price after discount. Then direct material cost per unit 3 rupees, direct labor cost per unit 2 rupees. Direct material, direct labor are part of variable cost. So we have to find out variable cost per unit. So variable cost per unit consists of direct material 3 rupees, direct labor 2 rupees. Fixed overheads 10,000. This is the total fixed overhead. And variable overheads are 100% of direct labor cost. Variable overhead. So 3 items we will take in variable cost: direct material, direct labor and variable overheads. Add up these 3, we'll get variable cost. And if sales are 10% and 15% above break-even sales volume, determine the net profit. It's very easy, very simple problem. First of all, we have to calculate what is the present BEP. So selling price per unit 10 rupees minus trade discount 5% given in the problem. So 5% of 10, you will get 0.50. So 0.5 deduct. So 10 minus 0.5, 9.5. The selling price per unit after trade discount is 9 rupee 50 paisa. Variable cost per unit: direct material 3 rupees, direct labor 2 rupees, and variable overhead is given 100% of labor. It is given in the problem. Variable overhead is 100% of labor. So labor how much here? 2 rupees. So 100% of 2 rupees, 2 rupees. The variable cost per unit is 7 rupees. And the total fixed cost is 10,000. It is asking you to calculate the break-even point, BEP. When per unit information is given, we can calculate BEP in units. So BEP in units is equal to fixed cost divided by SP minus VC. Fixed cost divided by selling price minus variable cost. So fixed cost to 10,000. Selling price 9.5, variable cost 7. So 9.5 minus 7, 2.5. So 10,000 divided by 2.5, 4,000 units is the break-even point. Now we can easily calculate BEP in rupees also, in value also. So BEP in rupees is equal to BEP in units into selling price per unit. How many units we got? 4,000. This 4,000 will be multiplied by selling price, 9 rupee 50 paisa. You will get 38,000. So we got BEP in units, BEP in rupees. Now the second question is, if sales are 10% above BEP, actually at BEP, no profit, no loss. When the business is at the break-even point, there is no profit, no loss. The business will get the profit after BEP. If the sales are more than BEP, then the business will get the profit. It is asking you how much is the profit. If sales are 10% above BEP, how many units is the BEP? 4,000. Now we have to increase the sales 10% above 4,000. So 4,000 plus 10%. 10% of 4,000 is 400. So 4,400 units. Simply, we have to find out how much is the profit if the business sells 4,400 units. Here, sales 4,400 units into 9 rupee 50 paisa selling price per unit. Total sales 41,800. From sales, we subtract the variable cost. The variable cost 4,400 into 7 rupees per unit, 30,800. Subtract sales minus variable cost, will get the contribution. The contribution is 11,000 minus fixed cost. The fixed cost will remain same whether we make 4,000 units or 4,400 units. The fixed cost will remain same, 10,000. So 1,000 rupees is the profit. That's all. Next question, if the sales are 15% above BEP, profit is how much? So two questions are asked. If sales are 10% above BEP, how much is the profit? If sales are 15% above BEP, how much is the profit? The number of units are 4,000. BEP is at what level? 4,000. So 4,000 plus 15%. 15% of 4,000, you'll get 600. 15% of 4,000, you'll get 600. So 4,600 units. At 4,600 units, how much you will get the profit? Sales 4,600 units into 9.5, 43,700. Minus variable cost, 4,600 into 7, 32,200. So contribution will get 11,500. Minus fixed cost will remain same, 10,000. You'll get the profit 1,500. That's all. So 3 questions are asked. First question, what is the present BEP? Second question, what is the profit if sales increase by 10%? Third question, what is the profit if sales increase by 15%? That's all. Finished. This is the end of problem number 26. Now 27th problem, see carefully. The following data are available from the records of a company. Sales 1 lakh rupees. Variable cost 60,000 and fixed cost 20,000. You are required to calculate the PV ratio, break-even point and margin of safety. So from this information, you have to calculate PV ratio, BEP and MOS. Also study the impact of change in the following variables on PV ratio, BEP and MOS. So changes are increase in selling price by 10% and decrease in fixed cost by 5,000. If these two changes take place, then what is the impact on PV ratio, BEP and MOS? So without these changes, what is the PV ratio, BEP, MOS we calculate? See here. Sales are given 1 lakh. It is given in the problem, first line. Variable cost 60,000, fixed cost 20,000. Now PV ratio. The formula for PV ratio, C by S into 100. Now we can substitute S minus V or F plus P. Now I am taking S minus V because sales are given, variable cost is given. So S minus V by S into 100. 1 lakh minus 60,000 divided by 1 lakh into 100. So 1 lakh minus 60,000, 40,000. So 40,000 by 1 lakh into 100, 40%. PV ratio we got. Now BEP. Break-even point, the formula is fixed cost by PV ratio. Fixed cost by PV ratio. Fixed cost given in the problem 20,000. Fixed cost are given in the problem 20,000. 20,000 divided by 0.4, 40% is the PV ratio we got. We got 40% PV ratio. So 20,000 divided by 0.4, 50,000 rupees is the BEP. Break-even point. Now margin of safety, MOS. Actual sales minus break-even sales. Actual sales are given in the problem 1 lakh. And break-even sales, just now we have calculated 50,000. So 1 lakh minus 50,000, 50,000 is the MOS. So presently we got PV ratio 40%, BEP 50,000, MOS 50,000 at present. Now we have to make some changes in the variables and find out what is the impact of these changes on PV ratio, BEP and MOS. Now, impact of change. Increase in selling price by 10%. It is given in the problem. If the selling price increased by 10%. So earlier we have sales of 1 lakh. We have made the sales of 1 lakh. Now selling price have increased by 10%. So instead of 1 lakh, we will get 1,10,000. 1 lakh plus 10%. तो 1,10,000 जो माल पहले 1 लाख रुपये में बेचते थे वही माल अब 1,10,000 में बेचेंगे. 10% बढ़ा दिए. तो सेलिंग प्राइस न्यू सेल्स 1 लाख प्लस 10%, 1,10,000. तो न्यू पीवी रेशियो C by S into 100, S minus V by S into 100. There is no change in variable cost. We are increasing only selling price. When only selling price is increased, the total sales will increase. Variable cost is remaining same. So 1,10,000 new sales minus variable cost 60,000 divided by new sales 1,10,000 into 100. 45.45. When selling price increased by 10%, our PV ratio increased. Earlier PV ratio was 40%. Now PV ratio has become 45.45. New BEP. New fixed cost divided by new PV ratio. Fixed cost is 20,000 given in the problem. No change. New PV ratio 0.4545. Actually 45.45%. If you want in fraction, divide 45.45 divided by 100. You will get 0.454545 like that. So 20,000 divided by 0.454545 like that continuously you will take, you will get 44,000. So what is this 44,000? BEP. BEP 44,000. Now New MOS, margin of safety. Actual sales minus BEP sales. Actual sales 1,10,000. The sales are 1,10,000 and the BEP is 44,000. So 1,10,000 minus 44,000, 66,000. So when selling price is increased by 10%, our new PV ratio is 45.45. New break-even point is 44,000 and new margin of safety is 66,000. So what is the impact? Here I am writing. When selling price is increased by 10%, PV ratio increased from 40% to 45.45. Earlier it is 40%, now it has become 45.45. The BEP has decreased. Earlier BEP was 50,000, now BEP has become 44,000. So BEP has decreased from 50,000 to 44,000. MOS, earlier MOS was 50,000, now MOS has become 66,000, from 50,000 to 66. So due to this change, the PV ratio has increased, the BEP has decreased and margin of safety has increased. Then secondly, decrease in fixed cost by 5,000. In the problem it is given the second change. The second change is decrease in the fixed cost by 5,000. Earlier how much was the fixed cost? 20,000. Earlier 20,000 was there, 5,000 decreased, 15,000. New fixed cost is 15,000. Now first, PV ratio will remain same since there is no change in sales and variable cost. Selling price no change, variable cost no change. So PV ratio will remain same, 40%. Now BEP, new BEP, new fixed cost divided by PV ratio. What is the new fixed cost? 15,000. The PV ratio, old PV ratio 40%. So 37,500 is the new break-even point. Now margin of safety, MOS. MOS is equal to actual sales minus BEP sales. Actual sales are 1 lakh and BEP sales are 37,500. So 62,500 is the new MOS. Now ultimately what is the effect? When fixed cost decreased by 5,000, no change in PV ratio. The BEP decreased from 50,000 to 37,500. Originally it was 50,000. Now it has become 37,500. And MOS increased from 50,000 to 62,500. Earlier MOS was 50,000. Now due to this change it has become 62,500. That's it. This is the end of problem number 27. So totally 27 problems I have solved on marginal costing. Hope you have understood the concept, the technique of marginal costing. So if you are unable to understand the first attempt, again you rewind the video, again watch from beginning. Definitely little bit difficult because you have to remember the formula and also you need some practice. In the first attempt itself you may not be able to understand perfectly, but after listening, watching, try to do it yourself independently, then only you can get the command. This is very important topic, not only for graduation level but also for post-graduation level. This managerial accounting subject itself is very important. So hope if you are satisfied with my lecture, give a like to the video, share it in your group, in your friend circle, and give your messages, comments. And lastly, if you have not subscribed, please subscribe my channel. We'll continue the next problem in the next video.